Thank you very much indeed for that. Right, let's drill down into the foreign exchange space. Everyone seems to love the dollar all of a sudden again. Cable 195.18, dollar yen 108.22. This chart shows you how the euro has come off its recent highs versus the greenback. As you can see, from around about, middle of the last month, we've just come off and trading near our recent lows. Dollar yen, as I mentioned, 108 now is the handle, 108.22, unchanged on the session so far. But has the dollar rally got legs, and what's driving it? Let's find out with Dariusz, Kowalczyk, who is the Chief Investment Strategist at CFC Seymour. Dariusz, very nice to see you again today. What about this dollar rally?
Good to be here.
How much further has it got, and what is actually driving it at the moment?
I think that when you look at the medium-term picture, the dollar continues to be driven by improved interest rate differentials and by the fact that the outlook for the U.S. economic growth looks much brighter now after especially the latest retail sales data. So our target for the end of the year is for euro-dollar to come down to 1.46, pound-dollar to 1.91, and dollar-yen to move up to 1.11. However, probably in the immediate future, like this week, there could be some small correction after disappointment that G7 finance ministers have not made a stronger statement in support of the greenback.
Okay, Darius, when you look at the data coming out this week in the U.S., though, not quite as big as last week's economic numbers, will that give you any sense of whether the dollar, I mean, you mentioned dollar strength, is that going to provide more support to the dollar?
Well, the data out of the U.S. this week will fall into two major categories. The housing market related, such as housing starts and building permits. And we think that the data there will beat consensus. And the second category would be industrial production. And again, we believe that it will exceed expectations. So the data should be favorable. However, the broad trend for the week will probably still be some correction from gains in the run-up to the G7 meeting. I remember last week the greenback finished at 4-month highs, with the dollar index rebounding 5% from the March low. So I think that despite the good data, there is some downside just because of the correction.
Dariusz, I want to go back to one of your initial comments, and you mentioned that dollar improvement on the back of interest rate differentials was one factor. So which currencies won't be raising interest rates? Because it seems to me everybody's got the same inflationary concerns.
Indeed. I think that the one major currency that will see a stable interest rate environment this year will be the Japanese yen, because the economy there is slowing and the central bank is just not in the habit, historically speaking, to tighten policy at a time of weakening economic expansion. So the yen probably will continue to suffer from that, but you have to remember that the yen is not just an interest rate play, but also a play on the global risk aversion. So as long as the investment appetite among international investors is improving, the yen will decline. My sense is that over the course of the summer we will see some further major write-downs among global financial institutions, and this could provide a temporary prop-up for the Japanese currency.
Dariusz, we'll leave it there. Thank you very much indeed for joining us. Always good to see you, Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour.